Hello, everybody. It's Dylan Milks here for Saturday, September the 24th, 2011. Glad to be with you all again. I know it's been a while. I think it's been about 6 weeks since I posted anything. But yeah, there's been a lot happening in the world, and certainly I've been continuing to follow everything that goes on in terms of the economy and where things are headed and some of the problems that we're facing, both in North America and Western Europe. But I want to start off today by talking about gold and silver. And man, have they ever just taken a beating and crashed over the last 2 days alone. Gold in the last 2 days has gone down 8%, or about $150 an ounce. Silver has absolutely gotten crushed, down about $10, which is about a 24% drop in 2 days alone. And then we also have platinum, which is down about $200 or about 11%, again, in the last 2 days alone. So what is causing these crashes here? Well, really, typically gold and silver are inverses of the U.S. dollar. And over the last couple of weeks, with all the worse and worse news that's coming out of Europe in terms of Greece and them defaulting, the U.S. dollar has gained about 8% just in the last few weeks alone, which is quite a substantial gain. I mean, it's been gaining even the last couple of days over 1% a day, which is almost unheard of in terms of gains. Usually if it goes up, at two tenths of 1%, or it'll drop 3/10 of 1%. But to have gains of over 1% per day the last few days, that's almost unheard of. So really, what's been happening here is that the whole situation with Greece, and all the rumors and the talk about a default, the Greek default. Now, really, the situation there is really has not changed since early 2010. And really, what they've been doing is really just kicking the can down the road, and essentially, what they've been doing is almost on a monthly basis. They're basically pushing the problem back another month. And again, even in September, in the middle of the month, we had some news coming out, resulting from some meetings in Europe that resulted in them deciding that they were going to meet again in the middle of October, and hopefully they were going to make some more decisions or have some more actions that they were going to give Greece. But folks, this has been going on since early 2010, and essentially every month it's the same old story. It's just they decide to do a little bit, and then pass it off to the next month. But really, this is really starting to to have a real drag on the stock market and the economy in general. The Western European economy is really grinding to a halt. Even Germany, which has been the strongest country for so long, their economy is basically stagnant now. U.S., we had in August, the job report was no jobs created. I think in September the numbers was something about a couple thousand jobs created in the whole USA in September. So really we're seeing a real, not just we're really seeing the global economy really grind to a halt, and really a lot of it has to do with with the debt situation in Europe. It's not just Greece. We had the bailout of Ireland earlier. Spain is major problems. Italy has major problems. Portugal, major problems there. And really, these are not these are really systemic problems that really run deep and really are not solvable simply by bailing somebody out, on a one-time basis, and hoping, crossing your fingers, hoping that they get their house in order. Really, the root of these problems really comes back to the underlying problem is demographics. And really, if you look at how sort of the demographics have changed even in the last 100 years. You've gone from families having 8 to 10 kids 100 years ago, to now, even some countries in Western Europe, the birth rate is like in Spain, for example, the birth rate is 1.1. I mean, that's just that's just incredibly low. And you think about it, all these social programs that we've come to sort of take for granted in the Western world, you know, all of these programs came to being around a time when there was about anywhere between 40 to 50 people working for every one person who was in retirement age. Not to mention the fact that when these programs first started, the life expectancy was 60, early in the early 60s, in some cases 62, and people would retire at the age of 60. So governments were planning these programs with the sense that they'd be paying them for 2 years, or 3 or 4 or 5 years at the most, and then that would be it. But now with the aging population, and the fact that the life expectancy is so much longer today, we're seeing these debt problems come to the forefront. And the other issue too is that, again, as I mentioned, 40 to 50 people working for every one person in retirement age, during the time when these programs were first came out, and now basically today we're anywhere between 6, 7, or 8 people today working for every one person in retirement age. And I know in Canada we're projected by the year 2031 that there will be 3 people working for every one person in retirement, and in the States that number will be 3 to 1 in 2025. And in Western Europe, the numbers are even worse. I believe it is by 2020, they will be at a 3 to 1 ratio. So think about what that means. And that means essentially that 3 of us who are in the workforce paying taxes into the system, we all of our tax money that we're paying for, that we're putting into the system, 3 of us have to cover the cost, the healthcare cost, the Canada Pension Plan cost, of all the other social benefits that our government basically gives to seniors and to all of the citizens. There's going to be 3 people paying for one person in retirement age. Again, 3 to 1 compared to 40 to 1 or 45 to 1 or 50 to 1 when these programs started. So when you start to look at those numbers, you start to see that these debt problems that we're starting to see now in Europe, really, this is not a 1-year problem. This is really, in my belief, is going to be a 1 to 2 decade problem, because now what's happening is that, again, as the baby boomers are all hitting retirement age, there's simply not enough people in the workforce paying taxes into the system to support not just not just the pension programs that are provided by our governments, but as well the additional healthcare costs that go along with it, and the additional benefits. So that's why I think that there's really no quick term fix for this. And you're seeing in Europe a lot of ways that this could play out. First of all, of course, one option which I've been hearing about is that Greece would leave the euro. They would leave the euro currency. Now that, of course, would wreak havoc on world markets and on the economy, as well. But that certainly is an option. Second option you're hearing a lot of is, the German people have basically been, bailing their Western European neighbors out for the last 2 years. And Germany has been the one strong economy in Europe for quite a long time, and the German citizens are starting to get very tired of this, because essentially all these bailouts are coming on the backs of the German taxpayers, and that's not going to last for much longer. So another option that I've been hearing about could happen is that Germany may leave the euro, simply because the fact that there's been a lot of revolt in the country from the citizens about what's been going on. The other option that I've been hearing about has been a consolidation of the European financial markets, meaning that there would be one governing body that would govern all financial policy for all of Western Europe. So that would mean that a Greek citizen would pay the same interest rate on a house or car loan as a German would. And this is just completely ridiculous to think that this would actually happen. But although it is a possibility, it may happen. So I'll definitely be keeping my eyes out for it and keeping everyone posted on what's going on and kind of giving my own opinion on it. But as I said, this is not a short-term problem, and really, it's really going to lead to what I believe is going to be a full and complete restructuring of our Western world, basically our countries and how we're structured, how the role of government, and all this, what services government provides for us. That's what I believe this is eventually leading to. It's really going to lead to a restructuring of the Western economies, and able to cope with the changing demographics. So thanks a lot for listening, and we'll see you again soon. Take care. Bye for now.